Hello, DJs. Welcome to another episode of another interview. And today I'm very honored to be joined by Westie, an crypto analyst that I have huge respect. He's an analyst at BlockWorks Research. And so, Westie, can you talk a little bit about yourself? How did you get into the industry and what do you do at BlockWorks Research today?
Yeah, absolutely. Thanks for having me on. So I can give a little background. Yeah, I'm Westie, research analyst at BlockWorks Research. I cover basically within BlockWorks Research, each of the analysts we have usually cover specific DeFi protocols, specific layer ones. So for me, I mostly focus on Ethereum infrastructure, liquid staking derivatives, rollups, and also synthetics as a DeFi application. And yeah, I mean, my background, my degree it's in mathematical business, which is basically just like business analytics, and was traditionally going down the management consulting path, as one does. And I hated it. And basically at the time got really into crypto. This was like late 2020, 2021, and just went down that rabbit hole and fell in love. And whenever I wasn't working, I was basically, tweeting, writing research, etc. And I had a Twitter thread that went pretty viral in 2022. And then Jason Yanowitz, who's the founder of BlockWorks, found it, DM'd me and said, "Hey, we're putting together a research team. Would love for you to join." And then joined basically a month and a half before we launched, which is what last Permissionless in last June. Yeah, and since then just been writing a ton of reports. Recently at this Permissionless, a couple of weeks ago, we launched our analytics product, which I had a big part in. Me and Dan Smith, another analyst, built that from scratch. Basically, it looks at a bunch of different, at this point, a bunch of different layer ones, layer twos, looks at them based on financial metrics, so like profitability, etc. Activity metrics that you would typically see, but ones that maybe you wouldn't see, like top contracts by activity or retention rate. We get a little deep, and then also like staking data whenever we can find it, and also having dashboards that compare the different protocols. So that's what I've been working on recently, and yeah, I hope that gives a good overview.
It brings actually a great overview. I love the data, the analytics product. I already said that to you before. I think it was pretty good. Like some missing pieces that we need, like when we need to gather information to do analysis. Out of curiosity, what was that thread that you wrote about that Yano reached out to you?
Yeah, that's a good question. So it was about it was at the time that the Luna Foundation Guard, if you remember that, within
Yeah.
Terra, bought like billions of dollars worth of Bitcoin, and everyone in the industry was like, what the hell is going on? And I was following that pretty closely, and so I knew, why it is they bought the Bitcoin, what they're using it for. So I wrote a very, very well-written thread basically explaining it, and it obviously blew up as it was the only, I think, thread at the time that answered everyone's questions. So yeah, that was the thread.
Yeah, that was a pretty that was a banger, as you can say.
Yeah.
All right, man. So I want to ask. You wrote a post after right after Permissionless and highlighting what you were your main takeaways. And like you talk about the Ethereum's centric view. The industry is not seen like that anymore. That's something that I could like see Permissionless too. I changed my mind a little bit about it. You talk a little bit about like the shared sequencer that might work. The partnerships we're getting with like traditional institutions like the Layer Zero Google announcement and the PayPal stablecoin, and this all of that while we having like poor market conditions. And besides that, we're still getting like a lot of regulatory scrutiny from the US and for like the UK and some other countries. So can you talk a little bit about that takeaways that you had at Permissionless?
Absolutely, yeah. I wrote a long thread on my takeaways, and this was done like Sunday at the airport as I was leaving, just like a brain dump of like what was on my mind as a result of the conference. Yeah, the first thing was I wanted to have a spicy headline, so it was like the Ethereum worldview is not necessarily the most dominant anymore. And what I meant by that was like, especially on my Twitter feed, a lot of the discourse is very Ethereum focused, and that like the roll-up centric roadmap of Ethereum is the best route. And there's a lot of sort of talking down almost to other ecosystems that are building in a different way. And you almost like, as you scroll through Twitter, at least in my feed and the conversations I have, that's like the tilt that you get when you view the industries through the like Ethereum lens. And this conference sort of hit through that, where you could actually like talk to founders and people building in other ecosystems, talk to them face to face, hear them on panels, like talk about their project in the context of crypto and where we're going. And you get a more like holistic worldview where you can listen to Tolly talk about Solana and hear, what they've been working on, why the network has been improving, what their North Star is, where they're going, and you can understand why they take that approach and why it's a good hedge against the roll-up, centric roadmap. And you can look at projects like Eclipse, that are marrying the two worldviews, right? And you sort of come away from the conference where maybe you had one worldview, one like sort of tunnel you were looking down. All of a sudden, like I felt like I had a more holistic view over the industry.
Yeah, I felt the same way. I actually talked about it in when I went as a guest in a few podcasts last week. Talked a little bit about that. We actually talked about that in the first day. I think since the beginning of the conference, I was already flipping my mind a little bit on Solana, different scaling, in a different scaling overview and mechanics. I was like, yeah, my Twitter feed, like you said, is the same. Like Ethereum. It's like, all right, we still smart contracts only have 8 years. We cannot call point a champion already. Too early for that. And yeah, I started to following along Solana because as a hedging against the modularity and the roll-up centric roadmap overview. And after the conference, seeing Tolly and seeing Lucas talk a little bit, he talked a lot about Solana is the best place to build right now. And I haven't heard a lot of Solana builders before. I saw a lot of people there, the DeFi panel. I thought was very interesting. And yeah, I could have some similar views to and similar shifts to what you had the conference too. I think it was pretty interesting. And can you talk a little bit about that shared sequencer stuff? Because it's something that I'm not following along very much. I saw Arbitrum announce they will start to test it out, right? So can you talk a little bit about why you think that wouldn't work before and why you think now it can work?
Yeah, definitely. I'll start by explaining what a shared sequencer is and then getting into what my thoughts and changes there. So basically, a sequencer for a rollup is what basically takes transaction from a rollup, is able to order them and then post them to the data availability layer. And right now you obviously have centralized sequencers where there's one sequencer run usually by the foundation of that rollup. They run it and it just goes to that one sequencer. And there are sort of conversations on how to decentralize the sequencer for better censorship resistant guarantees, uptime, etc. And one method that people are looking towards is called a shared sequencer, where multiple rollups can plug into one sequencer or one decentralized sequencer set. And as a result, they can basically outsource that so they don't have to worry about it themselves. And then it also opens up the opportunity to increase the surface area of MEV, because if you have a bunch of rollups basically posting their transactions to this one sequencer, then all of a sudden the sequencer can see transactions of different rollups, be able to create MEV opportunities across the rollups, like arbitrage between dexes. And so as a result, the shared sequencer can capture that value and then potentially distribute that back to the rollups. And sort of the issues that I had with that approach was there was no real incentive for rollup to plug into that ecosystem unless it was already valuable. Because if you look at the current sequencer landscape today, centralized sequencers are very lucrative. If you look up BlockWorks analytics and you look at the profit that these L2s are generating, it's millions of dollars on a quarterly basis, right? And so
Base especially, they're printing money right now. And before we move on, just to recap here, what how the sharing sequencer works, to explain for the audience. So let's say Arbitrum, Optimism, and Polygon ZK, they would plug into Espresso, right? There is one shared sequencer provider, and after it, they could share it between themselves and new rollups that would plug into Espresso, right?
Yeah, exactly. So like I said, I don't think the incentive was there, but with Espresso, they've been able to onboard Arbitrum, Optimism, and PolyZK within the last few months. And so as a result, they've already built up what could be a very valuable sequencer network. And now there's the incentive to plug in, because now you get connected to these three major ZK rollups or major rollups, right? And so as a result, now they've gained momentum, and to the point where at first I thought they were going to have trouble bootstrapping, but at this point it looks like they've captured considerable very high level rollups to plug in. And from here, I'm guessing that it's less of a question of who's going to plug into Espresso, and it's more of a question of who isn't, right? So they've done a very good job.
Makes sense. So do you think in this business of a shared sequencer, probably a winner take all or like 99%, right?
Yeah, it's either, yeah, winner take all, or there's like maybe 2 or 3 like different silos, but for the most part, it's definitely top heavy because, yeah, because the more rollups that plug into a shared sequencer, the more valuable it gets.
And so, like, I got it, and like, yeah, I tend to agree with you. Like, let's see how it develops, right? Because when you use the shared sequencer, just this is like a question for me too. You can use something similar, like it's like a native like interoperability, the trustless interoperability, right? Similar, like seamless to like when zk sync announced and the hyperchain stuff, and like if you share the prover, even if you like settle to another rollup, you can have like native communication too. Like it works the same way, right?
Not exactly. There's a shared sequencer on its own doesn't give those properties. It helps enhance them if there's like a shared contract in the L1. It gets pretty complicated, but because shared sequencers are not state aware, so they're not actually like building blocks, they're just ordering the transactions they see. And because of that, they don't have native like bridging functionality. So that would need to be done in another way. Like you said, a shared proving network is one way where you can have seamless interoperability, and that's usually done like on an L3 level on top of an L2, which gets kind of confusing. But like ZK Sync is a good example, and Polygon have those where you build a rollup on top of their rollup and their L1 smart contract, right? And as a result, you can have seamless bridging. So like it's a step in the right direction, but it alone does not like influence interoperability.
All right, I got it. Before we move on, I there's like something that popped in my mind right now that I've been thinking like for a while now, and you talk like a little bit about complexity and like get a little bit confusing. And when we come back to Ethereum, one thing that that I keep clicking in my mind is like the roadmap is getting even complex and more complex. Every upgrade we have, like in less and less people are able like to solve problems like at the Ethereum protocol level at each upgrade. Like we still have like 4 or 5 like phases for the roadmap if I'm not wrong right now. And how do you think this can like affect the not usability but the development of like the in the growth of the Ethereum ecosystem in the long run? Because when you see something like getting very complex, you start to like question yourself like if something here breaks, like we're bad. So it's bad. So how do you think about it, or do you think about it? And what's your opinion on that?
Yeah, that's a good question, and it's something we talk about a lot within like the analyst team is that we start arguing about like Ethereum's roadmap and we start getting super complex into the rollups, and then all of a sudden one of us is just like, why don't we use one shard? Why don't we use Solana, right? Like it gets annoying because of how complicated, things are getting and that the roadmap is. But at the same time, like I think Ethereum benefits from the fact that it has a huge community that cares and that like understands the complexity that's happening, right? And the fact that, people are willing to build rollups still on this, like on Ethereum, even at this moment when it doesn't have like a very large data availability capacity, right? Like people like are understanding the roadmap to a different degree because people care, and there's a lot of assets here, a lot of network effects. So while and also in terms of security, I can understand the concern in that the more complex something is, the more likely there are little cracks or something to go wrong. But I mean, the developers at the like Ethereum Foundation, people like the core devs that are building stuff are like absolutely top notch. I mean, we saw them go through with the merge and with Shanghai, like some pretty major upgrades that went without a hitch, right? So I would like sort of side with the fact that it is secure despite its complexity, but at the same time, if you look at something like MEV boost and like proposer builder separation, which itself is super complex, you're starting to see a lot of the research break down where, Flashbots defines like the what is it like the transaction supply chain, how it goes from like the user, then it goes to the searcher who finds the MEV opportunity, then to the block builder, then to the relay, then to proposer. And it's sort of starting to break down where actually the builders can also be searchers, and they probably should be because now they can extract more MEV. And the builders might also be relays because then they can, tap into more proposers, and like you start to see centralization that didn't really exist before. And it's like Ethereum is talking about potentially enshrining PBS, but then you see issues arise like this after what is it, almost a year now of MEV boost. And so, like, what happens 3 years down the line when we get more research and more people tinkering, right? So, the complexity is definitely a problem. It doesn't mean other ecosystems that maybe are more simple in design, like Solana, don't have their own complexities or their own issues, but it is something, yeah, I like think about a lot for sure.
Yeah, yeah. Like I feel the same way. Like I believe like the teams can deliver it, and like if someone can deliver it, are them. But yeah, still have like still keep thinking like especially on PBS. I was listening to a panel with like where Dankrad was talking about like Dank charging like was last year, and like when the first thing that he talks about is about like PBS and how complex it is and to move it and to get to like PBS and then charging together and how complex and hardware intensive it can be. So yeah, some that was something that's started to click in my mind. Yeah, but I think we can uh, pay attention and keep like looking close and to see like how this will develop. To finish here on the permissionless recap, can you talk a little bit about like how optimistic you are about like these partnerships with traditional companies, hidden banks, fintechs, or like tech companies? Like how bullish do you think it is for the industry, and like how like people are not realizing this yet?
Yeah, I think to me, it's like a good sign that if when we're in a bear market, that we see a lot of these big institutions like still paying attention and still plugging in and creating things like obviously Visa is very crypto natives. They've done a lot of like great research, and we see them now plugging into Solana because it's a lot cheaper of a settlement network than Ethereum is for USDC transactions. We're seeing, yeah, like you said, the layer zero Google partnership where Google's now the default oracle for layer zero. Obviously, you can choose other oracles if you wish, but it's now the default oracle. So Google's and layer zero is like as an interoperability protocol, like pretty deep in the weeds. So like Google definitely knows what they're doing as well. And yeah, you're seeing things like PayPal, you know, partner with Paxos for their stablecoin. You're seeing like this week we saw it's kind of stupid, but Pudgy Penguins, like their plush toys are now in
So
2000 Walmarts, which seems dumb, but like that's brand building at like a deeper level. And like kids are going to start buying these like penguin toys. And as a result, that revenue goes back to holders of the NFT of that specific plush. So like you're starting to see like even when prices and volatility is at its lowest, like you're still seeing adoption at like a weird level where like institutions are seeing this stuff, they're like okay with it. And so like as prices begin to go back up, as maybe, yeah, rates might be higher for longer now, but if they start to like we start to see that messaging turn in the US, like we might see like this is sort of like a good sign where things if things start to pick back up, we'll see even more institutions and we'll see all the stuff that they built in the bear market start to like bear fruit in the bull market. So yeah, to me, these are all like really, really good signs.
yeah, yeah, I tend to agree with you. Like, I don't know how it is in the US, but like here in Brazil, we see a lot of people that are not in crypto. Like, oh, so are you doing like scams? So how's your scam going? Like, so crypto's not a scam. And when we look into this stuff, was like, dude, there like information asymmetry is like all time highs right now. And funny, funny thing about like what this like institutional integrations like at one end we got like PayPal building a stablecoin, Layer Zero integrating with Google. In the other side, we see like kids buying Pudgy Penguins like toys. Oh, there was like one in Twitter, like some discussions and stuff about like the Layer Zero integration, like Hart Lambert, like the founder of Uma, uh, he was tweeting a little about concerns about like centralizing and like I first when I read I was like you can plug other oracles and you can plug your own oracle if you want. So how do you think like this? Do you think like this is like a fair concern, or do you think it's a little bit like of overreaction and lacks of pragmatism? Because I thought I felt the second the letter. So how do you think about it?
Yeah, this is a good question for the broader landscape as well. like within the case of layer zero, you're right in that it's the default oracle, but you can easily change it out and swap it out for a decentralized solution like Chainlink. So in terms of the layer zero, I don't see that as like a centralization issue. They're, I think, just trying to push Google as, hey, we have this like institutional partner on board, and so it's more like a branding thing than them like using Google as like the only oracle, and like, so I don't think it's them selling out anyway. But you look at like a big trend in Ethereum right now is pushing things off chain to like a centralized actor before publishing on chain. So like Uniswap X is an example. It's like their new DEX where instead of it being like an AMM on chain, instead they put out a request for quote from market makers and say, hey, I want to buy this asset at this price. And basically the most sophisticated actor that can get you the best price comes in and exchanges that for you. And so it like takes everything off chain, or at least all the computation off chain before pushing it back on chain. And this is like a bigger question of like, is this okay for the industry? First of all, because you're introducing a new like point of failure, single point of failure, which is the entities that are doing the off-chain computation. And then you're getting into the territory of like, well, should we design our blockchain so this one isn't possible and two like isn't optimal? So like the fact that Ethereum has 12-second block times is probably pushing us in this direction in order to optimize latency. And so is something like the Solana model look better in this case, where you can build completely like permissionless AMMs, order books on chain? You know, it makes you question that as well. So it definitely is an overarching theme. To me, like I don't think it's a problem as long as it's well designed. But if you're introducing new forms of risk and new forms of potential censorship, then we're definitely taking a step backwards.
I pretty much agree with you. I think like in sometimes we'll need to have some off-chain stuff. I don't think we can build like a scalable and decentralized enough blockchain so we can plug everything on chain. Even Solana can't handle that right now, and probably won't be able even after Fire Dancer. So I think we're gonna need to have like some stuff off chain. But just like you said, we just don't need to. We just can't add like single points of failures. I don't know how we're gonna do that, but it's something we as an industry need to figure it out. And like you mentioned Uniswap X, and I just want to ask you a quick question because I saw like I think it was at Zero X Research, a podcast. I don't remember if it was about like if I don't remember if it was at Zero X Research or Bell Curve, but you guys were talking about like Uniswap X, and I don't remember who it was, but said something about like the with the off-chain orders routing through market makers, how like the LPs, the on-chain LPs, would get only the toxic over order flow. And so, how do you think like that affects the on-chain LPs? They already like have like some hiccups that very few people can make money like being a market maker on V3. And so, how do you see that? And what like the some measures that you think we can take to like improve on the side for the on-chain LPs?
Yeah, great question. So LPs at this point, like 99% of them are losing money, both at the V2 level, V3 level. It just, how things are designed where, you know, those that are doing sex to dex arbitrage are basically creating toxic flow for the LPs. They're losing out on permanent loss. Yeah, like you said, if you're a passive LP for within V3, you're losing out to JIT MEV bots that basically provide liquidity at the last moment and take it away, where they're probably the ones that are more likely to make money versus the passive LPs. So there's a big issue within the LP market where, as Uniswap, all the fees that are generated go back to LPs. They're not back to token holders. And you have to strike a balance within an AMM between those that provide liquidity and the users of your like AMM, the traders, right? And in this case, LPs are kind of losing out. Like, yeah, V2 has a lot of liquidity, but in my opinion, it's like 10 entities that are providing all that liquidity, and it's probably those that are invested in Uniswap. or Justin Sun, like just like big whales. In terms of how we alleviate that, I'm not sure if we do. I think the models are just changing where I think we realized AMMs for LPs are inefficient and we're going more in the direction of order books, or at least like hybrid, like between complete AMMs and order books. There's plenty of people on my team that look into the AMM space a lot more than I do that probably will give you a better answer on how we solved the LP problem. I know ambient finance is like a good example of trying to look at LPs as like the bigger customer versus traders. So there's like different approaches that we're starting to see. But yeah, it's definitely interesting where we're going, where things are looking like you're either going complete AMM like curve, like you're like, no, we're sticking with this and trying to optimize this model, or going the other direction where it looks more like an on-chain order book.
Yeah, I pretty much agree with you. I don't like follow along with a lot of like AMM stuff like on my day to day, but yeah, I pretty much agree with it. And I think like uh, every as the time passing, we're gonna get even more like club exchanges and on chain with like the order books like off chain. So let's see, like what like thesis and ecosystems like you bullish right now? We talk a little bit about like how you like change your view a little bit like about Solana and about the builders there, and you're still very bullish on ETH and its ecosystem, uh, as we could see like in our conversation here and our tools. So, like, what are your main theses right now in like the ecosystems that you're seeing that are like most like well positioned to have like great upside in the upcoming years?
Yeah, I want to preface this by saying not financial advice. So any like tokens I
Sure.
mention, definitely don't buy them because I said I think they're cool.
I know I usually put the disclaimers at the end of the podcast, but yeah, it's always good to disclaim, guys. Nothing here. It is financial advice. Nada aqui é recomendação de investimento. I just said in Portuguese too because yeah, it's good to highlight it.
Yeah, definitely want to make that clear. But yeah, one thesis I've had for a long time is sort of like the fat app thesis, where right now and like in the past, we've seen the fat protocol thesis sort of play out, where people sort of look at these like L1s as accruing more value than all the applications that exist on it. And this was made famous by Joel Monegro a few years ago. But I coined like the fat app thesis, and that I think things will swing the other direction. And that was only the case because people didn't know which applications were going to succeed, right? And so betting on the L1 token was an easy way to bet on the ecosystem. It was sort of like a beta play where, or like an ETF, right? Like it was just like a play on the ecosystem. Whereas now we're starting to see applications emerge that have specific product market fit, specific use cases. And so I think we're going to start to see more specific applications start to take off versus the actual underlying like L1s, which have seen like the biggest gains. So like the Solunavax trade was big last cycle. I think the next cycle will be more application specific and sectors of applications that take off. So like ones that I'm looking at now would be the perps landscape. Like no matter what kind of market we're in, as long as vol is high, perps are like a very good bet because they're completely cash flowing. Like they're cash flowing machines, right? And betting on the best perpetual like markets, the ones that generate the most fees, I think are a good bet, or at least what I'm looking at personally.
I'm
So
looking
like
into.
synthetics, I think is a big one there, given that they're going to have the best like prices of any decentralized perp dex because of the fact that they use an Oracle model as well as they just charge the lowest fees versus GMX, which has to charge super high fees as well as GNX as well. And they're also, their model of having synthetics be the back end and having front ends plug into synthetics, I think is a really good model. And you're seeing competition at the front end level that pushes more activity, etc. So that's one that I'm excited about. And I'm also a synthetics ambassador. So I'm on the ambassador council, which is an elected position. And so synthetics is obviously something I'm super excited about. But the perps landscape as a whole, like DYDX as the order book model, as sort of the hedge against the Oracle model, I think is very good as well. So beyond like that sector, I think consumer applications are going to be a big one. I think friend tech is a good example of how quick things can turn viral within
Yeah,
the consumer app space. And so I think something, whether it's friend tech or something similar or something along the lines of that, will take off in a big way. And it's keeping your eyes in that sector. I can't give you any like other specific things to look out for other than the sector as a whole.
there's a
And
bunch of
then
forks right now, a bunch of like fintech forks. I saw one on Arbitrum, Mano, Solana, and like we're probably gonna see a lot of them, but probably like the best place to like ride the winner, right?
yeah, at this point, if you're bullish on the friend tech type model where you have like social accounts and people are trading, I think bet on the winner. Although I think once the friend tech airdrop drops, I think it starts to die out. That's personal
Agree.
opinion. But I think
Agree.
something along the lines of a social application will do extremely well and will break into the mainstream, especially if we're in a bull run and like, everyone's excited. I think friend tech just launched at the wrong time, but still did obviously well given the times. And then beyond that, like, yes, I'm bullish on the applications, but also looking at the infrastructure level and seeing what's undervalued. So you have like these ZK ecosystems raising billions of dollars, like Scroll is valued at 4 billion. There's a bunch of these rollups that are valued super high. I think looking at rollups that have potential and maybe aren't valued on a relative basis as high as others would be good ones. I think Eclipse, which is about to launch fairly soon, is one of those to look out for because it's marrying the SVM, which is super performant execution layer, with the Ethereum's liquidity, and then it's plugging into Celestia, which is super cheap DA layer. So transactions are going to be super cheap, and so I think that's like a really cool experiment. Um, and then obviously, I think within the role landscape, I think Arbitrum and Optimism are both like fantastic teams and that have already built momentum, and I could see them doing extremely well. Specifically, Optimism with their OP stack, the fact that they were able to get Coinbase to plug in, like, and the fact that Base, yeah, it accrues value to Coinbase as a company, but if someone's trying to buy a token, they're probably going to buy OP as a proxy because OP does get, I think, 15% of
Yeah,
sequencer revenue. So like,
15%.
yeah, I think,
I think of the profit, yeah, it's something like 15 or percent of the profit and 2% of revenue, something like that.
yeah, that is correct. So like, I think as you start to see more OP stack chains develop, as you see Optimism as an ecosystem do well, potentially, like, I think that's a good one to look out for as well.
Synthetics again, like come back to optimism too.
Exactly, yeah. And then, yeah, Solana is another one I'm looking at. Somebody as a hedge against the roll-up landscape, as well as like I'm a really big fan of their architecture. The fact that it is one single shard, and you can have synchronous composability while still having like the localized fee markets, which don't like take up the gas of the network. Like it isolates any one piece of state. I think it's like a really good design. They just obviously have hit some backlash after FTX, and they're still developing their DeFi ecosystem, which at this point they're kind of pumping the numbers because it's all basically leverage of just LSTs, which I'm kind of annoyed with, but I still love the architecture as a whole and what they're building over there. And then Cosmos, I think is going to make a comeback as well because they're sort of pivoting to, rather than having like siloed app chains, yeah, they're connected with IBC, but really they've all been siloed in the past. They're sort of condensing around Atom and the Cosmos hub, and within like the Atom economic zone, you see like chains emerge that are using Atom as security and then having like seamless interoperability with one another. So you have Stride, which is the LST provider. You have Neutron, which is like the DeFi focused chain that's being built. And they have Duality, which is like a very, very well designed DEX. You have Skip, which designs like MEV infrastructure for each of these chains, which I think they have like a fantastic team that thinks about MEV in like a fantastic way. And so overall, as they like coalesce around Atom, all of a sudden you have like an actual vision where instead of like silos, you have a cohesive network that rallies around like the same thing. And so I think like things are looking bright for that ecosystem as well. So like overall,
And besides that, you guys like are trying to fix that on tokenomics, right? So it is like you guys probably gonna be like gonna do a good job So yeah, I'm gonna reach out to Dave to see if I can have him here to talk a little bit about it and the whole like tokenomics and the Cosmos thesis in general.
Yeah, definitely. We're like in the process. I think David has posted 2 forum posts already that highlight, what we're doing from an ideological level, from a tokenomics level. So like I would definitely go to the forums and read that.
Yeah, I saw the first one, but like I didn't have time like to read it all. I was still traveling, so like yeah, I'm still out of a routine and like gonna get back home on Friday. So yeah, gonna take a look, a deep look like into it like after I get back to a routine. Uh, besides like all of like those ecosystems, like I'm pretty bullish on perps too. I think besides like they're printing money, like people want to gamble and like 50x leverage is like it gives you like a hyper shot of dopamine like instantly to your brain. So these will attract a lot of people too. And that is what's leading to the my next question. So do you look at all to gamify? And I remember talking to Matt, and then he's bullish on that too. And so, are you bullish on gamify? Or do you have like an opinion about it, or you just like don't care to look into it right now?
Yeah. I mean, on the perps thing, I think what's cool about it is that it has this gambling aspect while also being like good for institutions, and that it's basically the crypto native option, and that it allows you to hedge positions in like a capital efficient way. So I think like it's good in both ends, but Gamblify is definitely something I'm bullish on because like we're humans, we love to gamble.
Yeah,
Like we see how
human
much
nature.
money stake.com rolls in. Like their four founders are getting ultra rich because people love to gamble. It's just like something intuitive to humans. And I think crypto just creates a better rail for gambling. Like it just is what it
Yeah,
is. And I'm not saying like I'm bullish it for humanity's sake. I'm bullish it because it takes a part that is human within us and like takes it to a whole new level basically. But specifically within the gamify space, I don't have any projects I'm particularly looking at as like undervalued. I think rollbit is extremely sketchy. I
yeah, me
think
too.
if they are correctly reporting the revenues and that the trading that they're seeing isn't just wash trading, then I could see it as a great bet. But there's a lot of unknowns where they're not
Yeah.
completely transparent when they could be completely transparent. And so I'm a little weary of it. So I would be careful there. But overall, I think the sector does well.
Yeah, me too. Like, yeah, I think I pretty much agree with all you said. Like, not bullish humanity, of course. Not just like rephrase it better. Like, not bullish on Gamify for like the better like improvement of humanity, but like you said, like human nature, people love to gamble, and like the permissionless and transparent way that we can bring in crypto rails, it's like way better than all the traditional and opaque reels that we get, like at Bet365 and Stake.com, and like all these like casinos. Like just to give you an example, here in Brazil, all like most of the soccer teams, like the first division, like the 20 teams, I think 19 of them are like sponsored. The main sponsor are like sports betting platforms. I think it's like it's similar to what we see like with DraftKings and all this stuff in the US, right?
Yeah,
It,
it's all FanDuel, DraftKings. Yeah, it's the same stuff.
yeah. So yeah, I didn't find anything interesting yet, but like on that sector, I'm pretty bullish. So you said like you were an ambassador at Synthetics. You said you're pretty bullish at Synthetics as like being working as a back end in a liquidity hub for like all the front ends. So can you talk a little bit like about Synthetics V3? Like I remember seeing in the governance forum that they approved to deploy V3 on base when it's red, right? So how do you can you like talk a little bit about synthetics V3 and like why are you so bullish on it?
Yeah, that's a good question. So if you look at synthetics now, basically how it works is people stake their SNX, they borrow SUSD against it. The borrow amount becomes debt for the system. and basically the debt updates based on how traders of the synthetic assets do. In the case, they have perps markets and they have spot markets. The spot markets aren't used very much anymore. The perps markets are what like is the cash cow and what people are like coming back to every day. Like what's really working. And the perps market design has like a dynamic funding rate, which basically influences market makers to take the other side of a trade because they're able to capture funding. So as a result, like the trading, like the OI basically becomes neutral over time. And so as a result, like SNX stakers, their debt remains roughly even and they just like collect fees, right? And so like that's how the system looks. And within V3, how it works is this V2 system exists within V3, but V3 is just like a more modular architecture to allow for more like customization, new pools, etc. So how it works is you have your collateral, which is SNX, or they're potentially adding other forms of collateral like ETH or STETH, things along those lines. The collateral then points to a pool. So you'll have the main pool, which is like the pool that exists now called the Spartan pool, but you can create other pools if you wanted to that are different with like different collateral types, etc. And then from there, those can point to markets. So perps and spot are the markets that exist now, but you can create new markets. And those markets can, maybe if you have a different pool to the Spartan pool, you can create a new market and just like use that as a testing ground. And then once Synthetics governance sees that it works, then they can incorporate the new market into the Spartan pool, right? So if that makes sense, like that's how V3 works. It's a more modular in that you can basically create new pools, have different ways of like creating systems, and from there, so the possibilities are pretty endless. You can create like insurance markets, you can create options markets, you can create like really whatever you want, and allows for like an experimenting ground basically.
That's interesting. When you said like about creating like using new types of collateral as ETH, like I was reading like Kane's like last post like New Hope on the plane on my way to Permissionless, and like he said that probably they're gonna try to experiment with ETH as a collateral on base, and he highlighted some concerns, and like it is a good experimentation. I think it's something need if we want to like grow like the liquidity for like synthetics products, and if they want to like go multi-chain. But like he had a concern that I thought was interesting, like how could it be like how could like enabling ETH as collateral would be bad for the synthetics token? Like that's a concern that was like keep me like thinking in like I think it is like it is a little bearish, a little bit bearish for the token, but it, at the other side it is bullish for the project, for the product. So do you think anything about it?
Yeah, this is a great question. This is a big point of contention within the synthetics community where a lot of people believe that SNX is like should be the only collateral to give it all the value. And there's people on the other side that think, well, no, ETH and LSTs have a ton of liquidity that could back the ecosystem and just give SNX more liquidity. I think the right approach is probably using SNX up until the point where you really can't anymore. You start to close in on a stealing of liquidity, and then you bring in other collaterals, as well as marrying that with what Kane said, where you basically use base, a new network, as like a testing ground to see, okay, do people even want to use ETH collateral? If they do, if they really do, then you can incorporate it, right, and figure out a way to capture value on that, maybe taking certain percentage of fees that flow through that liquidity, right? So I think having experimentation while also not being too quick to include other collaterals, because then that obviously dilutes the value of SNX. Like just experimenting, feel it out, and then when it gets to the point where you should have it, then you incorporate it.
Yeah, I pretty much agree with it. Like, don't follow along that much with like the synthetics. Like, too many things just for one guy to follow along. But yeah, I try to like keep it up with some stuff, and like I think I pretty much like agree with that. And like, do you have any thoughts on Infinex, like the new front end? So can you like explain, like give a brief explanation on what it is and if you're bullish or bearish in it and why?
Yeah, I mean, I only know about it from what I've heard from Kane and people that work in Infinex. They're being a little bit stealthy, but they should be, I think, launching a long time alongside Perps V3, which is coming up pretty soon. But essentially, what it is, it's a new front end on synthetics. So you have Quinta and Polynomial are like the main front ends now. Infinex is going to be a new one. What they're doing differently is they're trying to basically take the centralized exchange experience and putting it on chain. So instead of having like a private key or typical wallet, it's just like a login, like username and password. And it has like a really slick UI. It allows to like when you're clicking buttons and you're making trades, you don't have to like click sign anywhere. It's just super easy and intuitive. And what's different about theirs as well is that instead of having their own token, like Quenta has their own token, instead it's going to be governed by the SNX token. So SNX holders will elect like a Infinex council, which I think elections are coming up somewhat. I think there's like 4 members of the council to start, and they will be like the governing body of Infinex. And there's going to be no token, and so all the fees accrue to SNX. And so right now, I think there's like you get 10% as an integrator, 10% of fees come to you in the form of SNX, like via the synthetics treasury. And so what they're going to do with all the fees that they get is they're just going to take the SNX and stake it. And then any fees that they generate from staking SNX, they're just going to buy more SNX, stake it. So they're just going to continuously grow a pie of SNX that they're staking, which like grows the liquidity that they're able to use as an exchange, returns value back to SNX like itself into synthetics. And so it sort of creates like a cool flywheel.
I think I got it. Yeah, it looks interesting. I think that's a pretty good idea. And aren't they using like some market makers too, or just like the synthetics liquidity?
I mean, just the synthetics liquidity. I'm guessing market makers will probably go through them, but again, you can access the same SNX liquidity in books as you would Quenta Polynomial. So the same market makers might go through Infinex. Yeah.
I got it. Yeah, it looks bullish. Let's see, like when they launch it, probably gonna be a like good product, like as most of the synthetics stuff. Like I think like one of the those like OG teams that keep working, they and like especially Maker keep working and besides like improving the protocol and improving some kind of like the tokenomics too. Like Maker didn't do anything right now, but they probably are gonna work in something with the end game and stuff. And like synthetics, they're like they had a huge problem with like the inflation like back in the day, and like they're working like tirelessly to solve that. So yeah, I'm pretty bullish on it too. And Wesley, like we're getting, do you have anything else to say about synthetics and Infinex?
No, I think we touched on everything. I'm just excited to see like V3 is live right now, but no one's building anything on it. They're sort of waiting to migrate a Perps V3 that goes live in a couple weeks, and I think it's going to be like a pretty exciting time.
Yeah, me too. Do you know when they will deploy on base, or they're still waiting for the perps, or there's no date yet?
So V3 is technically live on base, but there's not anything going on over there because the Perps market hasn't been enacted yet. And so that should be enacted fairly soon. I think an SIP is going up somewhat soon. And like there's debate of like which collateral should be used, but I'm guessing we're gonna go with Kane's plan and use ETH and use that as like a test grounds for ETH collateral.
And before we finish here, like I usually like ask for the guests to share like some alpha for the people that are watching us. So, but today I'm gonna ask you for two alphas. Yeah, one. First, can you give like one alpha for like uh, aspiring analysts? I know a lot of people that listen to this here. They want to work with crypto, and like most of people like that already trading and studying, they want to work as analysts. So, what would be your piece of advice or alpha for those like that want to work as a crypto research analyst in this industry?
I think the biggest thing you can do to get a job as an analyst is to like do the job already and create some sort of piece or pieces of content that are above and beyond like the current level that exists, or at least is of the level of the job that you want. So, like recent example is we hired Brick, who's a new junior analyst on the BlockWorks team, and we found him even with like a couple hundred followers because he created a really in-depth, well-made uh, financial modeling dashboard with Excel for Avo, for like Ribbon Finance. There's now Avo Options Exchange, and it was so good. Like we had to talk to him, and then you demonstrate your understanding in the interview, and like that's a good way to get a job as an analyst, is like have pieces of content that show you can do the job really well.
That's great. That's great advice. Yeah, even like if people like believe that, most of them don't do it. So yeah, do the free work first, and after that you get the rewards. Yeah.
Exactly. Yeah.
And about like the another like an alpha for markets or for everything, actually, like if it is like for like doing like a crypto analysis and ecosystem to take a look, even on like good habits, like and any alpha that you can share like with our listeners here, that those that don't want to be an analyst, those who want, they will get like two alphas. So yeah.
Yeah. One thing I think you mentioned at some point, there's so much information asymmetry in this market, and it's just being in the weeds, like being like in the group chats, like just trying weeding your way into the information before other people get it. And I think one piece of alpha within the markets that I can share now is if you're looking at the Arbitrum forums, recently they passed 50 million ARB in incentives. And right now you're seeing the applications from all these applications roll through of trying to get their share of that ARB. And if you look at the proposals, you read through them, you're going to see which ones, have a good plan of using that ARB. Maybe you're asking for ARB that is way above on a relative like basis to their market cap. So like, and gauging how likely that is to pass. So keeping your eye on something like that, like a major event coming up with a ton of incentives, I think is a good thing as well. But yeah, it's being in the weeds. It's like putting in the time and effort to find information when other people are just too lazy.
Yeah, I pretty much agree with that. Like it's a great alpha because it's something like that we should have in our mind, like but most people don't. And like you said, like reading for governance forums is like basically nobody does it. And like if you do that, you're gonna be like 90 to 95% or ahead to 90 or 95% of like all people that are here. They're just like reading threads, like following like blindly the traders, the engagement farmers. And yeah, it is hard, but like if you're in the weeds and if you're like exploring stuff, like it's not that hard, right?
Most people aren't reading the forums. Most people aren't in the Discord chats, like asking. You have direct access to founders, and you're not asking them the questions you have. Like, just yeah, be in the weeds. Like, and trust me, you'll do really
Yeah.
well.
It's like that meme, right? Like the monkey. You say monkey sees action and like brain activation and the a big head green candle, and like people buy there because like they're lazy to get the information. So yeah, man, thank you very much like for the time. Thanks for the conversation. It was like a really great and like deep conversation about like a lot of things we get happening in the market right now. So yeah, man, thanks very much for your time. And before we finish here, do you have any final words to say?
Appreciate you having me on. Definitely, anyone here, check out BlockWorks Research. Follow us at BlockWorks Res on Twitter. Like we release a lot of good threads on stuff happening. So if you want to keep up to date, definitely follow us here. Follow me at Westie Capital on Twitter as well. I tweet a good amount. And follow all the BlockWorks Research analysts too. We put out a good amount of alpha here and there. But yeah, that's basically everything. Thanks for having me. This was fun.
Yeah, yeah, thanks, man. I'm gonna leave like Westie and the Blockworks links at the description of the video. So yeah, again, thanks very much, Westie. And like nothing said here was financial advice. Nada falado aqui foi recomendação de investimento.